All right, everybody, welcome back to another episode of Mining Stock Daily and kicking off this week's corporate updates with our friends from Mining Americas Inc., the artist formerly known as Minera Alamos. They do trade on the TSX now with that same ticker up in Canada, MAI, and on the OTCQX with MAIFF. The company did report their Q2 financial and operating results here. And everything with Pan and also Copperstone, we'll talk about that here in just a minute, continue to be on track. It was somewhat of an inflection point, but happy to welcome in CEO Mr. Darren Blasutti once again for the update. Darren, congratulations on another successful quarter. Give us that big, sky view down on on Mining Americas. I won't make that mistake very often, I promise, of the quarter.
Trust me, Trevor, it's a tough transition when you've been doing it for a long period of time. So listen, we produced 8,300 ounces or so in the quarter. Revenue not a record like the first quarter because we had higher gold prices and we had higher production. But we made around $33 million in revenue. We had almost over $13 million of earnings from mine operations, 6 cents a share of adjusted net income, and I'll talk a little bit about that. EBITDA, just EBITDA around $10 million. Cash balance flat quarter over quarter, but that's good because we got rid of all the hedges and all the prepays, and so those are all gone. I think with a quarter of lower production and much higher oil prices, we still managed to be below our bottom end on cash costs and kind of in the middle of our AISC for the quarter. But on a year-to-date basis, we're under the the cash costs and we're kind of below the midpoint of AISC. And as we deliver much more production in Q4 as a result of all this additional stacking we're doing, we're only going to have better quarters going forward. And it's nice to see the gold price back. And so the other thing that really impacted, as I said, we sold 1,500 ounces in Q2. Again, just historically, if you go back to August of 2025, the company had 11,000 ounces of gold that were sold forward at $2,200. So in the 9 months that we've kind of had these operations, we've sold those ounces down. Some we got rid of with Scotia when we did that deal, about 3,000 ounces. But the other 8,000 ounces we've been chewing down quarter over quarter, which impact our realized price, because if that's what we're selling. The other thing is our production was very focused, again, because we have this new mining fleet and we've gone from kind of 55,000 tons a day of processing, and we're getting up into the 70s and 80s and now into the hundreds now in August. We saw a really good June on a production basis. And so that was the lowest quarter selling at the gold price. And so we had a few things impact. But as I said, I think the whole point of doing that, closing that revolving credit facility with Scotia National, was to get rid of those 11,830 ounces of gold that was either at zero or at 2,200. And, that's gone. And going Q3 forward with these higher gold prices, all our gold will be sold at those prices, and that will drive better financial results in Q3 and Q4.
All right. Well, that's a great wrap right there, because actually I did want to lead into my next question when we start kind of diving into a little bit more detail on a lot of what you just explained right there. But, with that adjusted net income of $6.5 million, obviously you had to cover the call option settlements, the gold loan losses that fixes into those numbers. But can you break down for me what a normalized cash flow from Pan actually looks like going forward? And what should investors kind of expect as recurring quarterly cash generation from here on out?
Yeah, I mean, if you assume roughly, 85 to 9,000 ounces, and again, I think the way on our conference call this morning, we kind of said Q3 is going to be similar to Q2, and then we're going to have a really big Q4. But when you look at it, you're going to see revenue in that, let's pick $4,400. You're going to see revenue in that $38 to $40 million. You're going to see that net income in $12 or $13 million. You're going to see cash flow generating, as we've talked about, free cash flow from the operations, because obviously you don't have depreciation and all that other stuff. So again, I'd expect you're going to get 10 cents of of net income. You're going to get, $17 to $18 million of earnings from the Pan mine on a quarterly basis, and you're going to get cash flow that's pretty close to that. And so as I said, I think Q2 and Q3 will be similar, except we'll be selling gold in Q3 at $4,400 instead of selling it at 4,000 or 2,000 like we did in Q2. And again, Q4, you're going to get a big increase in production from what Q2 and Q3 were, and a little bit higher than Q1. So those will all help generate. And again, most importantly, again, mines aren't linear, but if given we're stacking 100,000 tons now per day, or moving 100,000 per ton in the mine, we're also stripping more. So you're going to see that, we talked at the beginning of the year, we're going to have $13 million of non-capitalized stripping in there. That benefits the mine in 2028, but you got to do it today. The other thing that happened is, we moved the mine plan from a 1,600, 1,800 ton a day mine plan to 2,600 ton a day. So right now we're moving a lot more waste as a result of that plan, but also we're putting some 0.2 gram per ton ore that we're finding on the pad. So again, that will help next year, because if you remember the Pan sequence, it was 35, 36,000 ounces this year, then dropping quite materially in the second half of 2027, and then picking up massively in 2028 to have one of the biggest years ever at the Pan mine in 2028. We're trying to smooth that out right now, so we don't see. So I think the original plan from Calibre was 24,000 ounces next year. Now we're up into the 30s, right? So, and again, as we continue to work on this plan, we continue to see some of this lower grade material that we had planned to be waste at a higher plan, that'll come back onto the plan. And so, again, these open pits it's like turning the Titanic, right? So right now, we brought in a new contractor at the end of the year. We've got all new equipment. The contractor's totally loaded up. So we're, probably gone from, 58,000 tons a day to like 100,000 tons now. And part of that's going to be stripping and a cash and cash out, but it's setting up for 2027, 2028, 2029, 2030. So these things have to happen now or they don't happen. So, but in regard of all that, the mine is still making significant free cash flow, as you can see by the $2,000 AISC, right?
Right. Well, Darren, I mean, listen, if you're not making money at $4,400 an ounce of gold in Q3, you're in the wrong business. You've been in this business long enough to know that.
Yeah. And again, we're really excited about Q4 because, as I said, it's the production just kind of steps up because, it takes about 6 months for the gold to kind of flow through the heap. So all this extra material we're putting on the pad will get a lot of that value in Q4.
Okay.
But you're paying for it today, right?
Right. Well, but let's actually talk about that, because your cash cost actually came in at $1,740 an ounce. That is below your guidance range. But maybe was it the quarter? I mean, are we kind of maybe
that's year to date, Trevor?
Yeah, the first half.
First half. Yeah, absolutely.
Yeah.
But again,
I mean, is that sustainable? Is that sustainable for the second half?
In Q3, you're going to see results that are similar to Q4 on the operating side. Sorry, in Q2, you're going to see Q3 is going to be similar to Q2, and then Q4 is going to be better than Q1. So the answer is, if we get the ounces we project to get out, we're going to make our production guidance, and we're going to be lower on both cash costs and AISC.
Okay,
and that's our job. And of course, Trevor, I think the other thing is that Pan has never been an asset that has done poorly, but it's never been an asset that's blown out, but way better than expectations, right? It's a very steady state asset. That's what you want, quite frankly, when you're building 3 mines in 27 months. You need predictable cash flow. I mean, the thing that has not been predictable, obviously, is the gold price, right? From 5,400 to 3,900, and every number in between. But clearly, as I said, we think despite the higher energy costs with fuel, we are right on our budget, and we are on a year-to-date basis below our estimates on cash cost, and slightly higher. There was some additional. We ended up putting a second crusher into Pan because we're having so much more material coming to the pad of lower grade material. that we had to go out and spend like close to $1 million buying that really impacted the ASIC. And we had to replace an old loader. These things cost $1 million, but if you only produce 8,000 ounces in the quarter, that's going to have that $1 million of additional capex is going to have some impact, right? So again, we're very comfortable with where we are. We think we're going to do at least as good in the second half as we did in the first half, maybe a little better. And that's, again, going to continue to generate cash flow. And as I said, I think higher gold prices as we're seeing them today. Again, we don't, and the other thing is just remember, 8,000 ounces have been delivered since August till kind of May at $2,200. And now we don't have that impacting our average realized gold price during the quarter, right? So we're going to be up substantially this quarter on average realized gold price. It was less than $4,000. So again,
sorry, I didn't mean to interrupt you because I did want to ask you kind of what.
No, I'm just saying if we average 4,400, that's an extra $3.5 billion of revenue, right? Just doing the same ounces.
Well, and with a higher mining rate, like you think you did mention, you ramped up from 51,000 to 70,000 tons per day, and you expect to hit 100,000, correct?
Yeah, so tonnes and tons, we just got to be careful. So 52,000 tonnes metric tons. We averaged 70 in June, but we hit 90 in days in June, and now we're seeing that number be increased in July and August. And that's partly stripping, but it's also around the edges of the deposit. We're finding lower grade ore that maybe you wouldn't have put on the ore pad at $2,000 gold, but at $4,000 gold, you're going to put it on the pad, right?
Yeah. Okay. I kind of noticed in the cash flow statement you had $8.5 million in working capital outflow in the first half. I mean, does that materially affect the free cash available for? I want to transition to Copperstone, but does that have any material effect with the Copperstone funding the later half of this year?
No, it's just that, like in working capital, for example, in January we had a big Equinox payment that we made during the quarter, which was the final installment. What you're seeing is, which I hope people understand, is we've gone from $82 million of working capital to $106 million in the quarter, right? And that's a result of moving out all of. So just think about that's a $24 million increase in our working capital. Good news, right? Well, a lot of that 24 million was what the amount of money we were going to lose by delivering into those ounce contracts because they were in current liabilities. Now the debt from Scotia's moved into a long-term liability, so we pick that up, right? So again, that's giving us more working capital and more short-term liquidity to be able to build those mines. So I would take it as a real positive. And if you looked at the liabilities at Pan, our current liabilities have come down from end of March to December and now end of June. So we have the same amount of cash, but we've dropped a significant amount of current liabilities out of the balance sheet, which again, loading up on liquidity to build these mines, right?
Right. Okay. So in the first half of the year, you've produced just under 17,000 ounces. Your guidance is 32 to 38,000. And you expect a strong Q3, but a very strong Q4, correct?
Yeah. So I'd say, again, I think we've said Q3 similar to Q2, Q4 strongest of the year.
Okay.
So second half will be higher production, lower costs than the first half.
Okay, very good. All right, Darren, I do want to take some time and kind of transition to back to Copperstone here. Give us the lay of the land of, obviously there's been a lot of things happening with the makeup of the company, the equity itself now trading on the TSX. We have the official name change, which I promise I will do my hardest not to mistake as much as I can. But give us what's happening on the ground here with Copperstone and what's been going on this summer.
Okay. So, what's the most interesting thing is that we're building, a very high return underground mine. And last Wednesday, the board was at the Copperstone site because we had our board meetings on Thursday. And we actually went underground to the face of mining. So there's two portals there, the upper portal and the lower portal. We were actually, before the mines barely started its processing regeneration, it just tells you how much infrastructure is in the ground already and why the
Mm-hmm.
price is so cheap. So what's been happening, just so again, we went underground into the mine. So the de-risking part of what you do in an underground mine is the processing equipment always works. It's what it costs. The question is, can you get the mine into production and can you feed the mill from the mine? We already went down like last week into the mine. So that's
Mm.
never in my career have we had like a mine where, you're basically at the face of the mine. And that's why, we talked about in the Copperstone capital there being 3 months of uh, ore on the ground at the mill when the mill starts up, and having 6 operating working phases when we start the mine. Usually you get to 3, you start the mill up, and you work your way up to 4, 5, 6, and you're gradually increasing production. We're actually going to be ready to go when the mill's ready. So the mill is the long lead time item
Mm-hmm.
of this project. And I think I've used this before. There's another project in Oregon where they're going to build a 650 ton a day mine for 195 million. We're building a 1,000 ton a day mine for 58 million. Why is that? Because all the infrastructure is in the ground. So what have we been focused on? We've reopened the portals. We're demolishing part of the mill. And why I say why? And the reason is we're going from a 600 ton a day ball mill to a 1,000 ton a day ball mill. So there's some pictures on the website. You can see that old ball mill's been taken out. We've had to reconfigure the mill, and the big new 1,000 ton a day mill sitting in a plant now that we have construction approval between Tucson and Phoenix, and it's being refurbished. What does refurbished means? It's being checked for cracks, anything they find. They're filling, they're getting the mine, the gear equipment, all that stuff uh, repurposed to be able to be used in this structure. So the secondary, the 2 crushing system there, again, is being worked on and upgraded because it's the mill that's the long lead time item. We've had a
Mm-hmm.
demolition crew in there. Uh, we went into the assay lab, which is important because we're drilling there now. And it feels like we'll be able to, in the next month, be processing some of our own internal processes. That lab's probably worth $3 million. So, all
Mm.
of that equipment is on site. Um, we are, again, but it's all, think about it as detailed engineering from the study, then the demolition of getting things that aren't going to be there out of the way, the restructuring of the plant building itself to take this big mill. We said we just showed pictures of our mill, the old mill coming out, and the new mill will go in kind of at the end of the fourth quarter. And then once that happens at the end of the fourth quarter, we'll start to do that development work and getting that ore stockpiled ready for ready. There's some flotation we're waiting for. One of the big complicating items of building anything right now is the tariff things that have been created by Mr. Trump.
Mm-hmm.
Uh, the mill, the port at Los Angeles either has 24/7 work or nothing because you don't know when you're getting stuff in, you don't know when it's coming. You got to be ready to take it when it comes, even if you're not ready for it. So that's where the uncertainty is. I think the mine itself, which is usually the long lead time item, is not the long lead time item, which makes us feel good. It just means that we got to get on with the mill work that has begun, and that's been the focus, and that will really be the focus till kind of maybe November, December.
Okay. So when are there mining boots actually on the ground doing underground development? Do you have a time frame when that happens? And will you be
Yeah,
doing some of that underground development and stockpiling ore while the commissioning of that mill is going on?
yeah. So the plan is small mine development, which is the contractor we're going to use that Kevin Small, our EVP operations, used at Jarrett Canyon and has great familiarity with. They'll be coming towards the end of the fourth quarter. They'll be developing into the 6 working phases, and all that development cost um, and all that waste will be removed. And then by the time we start that mill for commissioning, we'll have 3 months of ore on the ground. That is the plan, and the 6 phases. So let's just say people go, well, what happens if gold price drops to $3,000? Well, we got 22 million in the budget. for underground development and stockpile. Maybe we have 1 month stockpile. But right now, where we are based on our capital and our cash, we think that's a really prudent way to look at getting that project ready, because it's not going to be an intermediate delivery of gold for the first year. It's going to be full bore as soon as that mill starts up.
Mm-hmm. I know you and I, every time you and I talk, we talk about you and the company bringing on Copperstone with minimal or nil dilution. Where the
Yeah.
numbers sit at the end of Q2 and with the forecast for Q3 and possibly Q4, the numbers still look pretty tight here, Darren. I mean, how tight
Yeah.
are they to you in the company?
Listen, we want to maintain $20 million of cash on the balance sheet. Like, it's hard to
Mm-hmm.
be building, like, for example, if we got a permit on Cerro de Oro, there's costs that have to go to get to that. There's exploration and network we're going to want to do, right? Like right now, that's pushed off into the future because we're not planning to start that mine till Q3 2027, right?
Right.
So the way we look at it is, we haven't made the decision on Gold Rock yet, but we have made the decision on Copperstone. We are completely self-funded for Copperstone. We think we're we're going to be we're going to be down in capital in March, April of next year to that $20 million number, using our current which is, I think we're using 4,000 this year and 4,400 next year as estimate. And if we get a very quick permit on Cerro de Oro and we want to move that forward, then we're going to have to look at things, but we can also increase our debt, right? Like, we
Right.
don't have to. So our job at investors at this price is to not dilute our shareholders. Okay.
Mm-hmm.
The only reason we dilute our shareholders is if there was some real reason to do it. And the only thing I could think of that would be there, Trevor, is an advancing of Cerro de Oro faster. Like, there's going to be a $4 or $5 million payment there. There's going to be, again, we don't know when we're going to get that, so it's hard for me to answer the question. But if it was just to build Gold Rock and Copperstone, I think we're pretty good, unless gold goes, kind of pear shaped and we're at $3,500, right? And
Yeah.
trying to build two. The other thing we can do is we can slow down the build. That doesn't make a whole lot of sense to us because the projects are such high return projects, right? But
Right.
ultimately, end of the day, we're committed, and we're looking at every way to do this without ever diluting our shareholders. Because, as you know, the management and board are big shareholders.
Yes, I do know that. And I am a shareholder. I will say that, not
Yeah,
as
yeah.
big as a lot of you do.
So
Um,
again, we've certainly said without equity dilution, we certainly plan to keep that. But if people won't, if something would happen on Cerro de Oro, we got to figure out if we'd go fast. Maybe we wouldn't go faster, right?
yeah, yeah.
But
Well, and
again, these are
you
the
also have
things.
you have a favorable market. If you needed a plan B, at least you have a market. At least, if today I would say plan B's option is with a favorable market, you could go out and do that
Well,
financing pretty damn
I'd be
quickly.
looking at debt first.
Okay, fair
Can
enough.
we take our 75? We need 10 million bucks. Can we go from 75 to 85, right? Like,
Yeah,
again,
yeah.
we're talking about, going through a build of two mines, and maybe and not wanting to go less than 20 million in cash, right? So we're
Hmm.
we're not,
Hmm.
because what we don't control, as you know, is the gold price, right?
That's right. That's right.
And
I'm
so
glad
we
you.
have to maintain
Sorry.
flexibility there.
I'm glad you mentioned Cerro de Oro because I did want to just kind of quickly highlight that. I want people to not forget about Cerro de Oro, but and you did kind of mention it, the permitting process. Have you heard any updates of what's going on within that portfolio of projects looking for its permitting from
Yeah.
Mexico, and where does Cerro de Oro kind of sit in all that?
Yeah. So we actually had a very good update from our Mexican team last week at the board meeting. So effectively, you've seen AXO, you've seen Go Gold, you've seen Silver Tiger, you've seen in Zacatecas, you've seen Tech and Agnico, right?
Mm-hmm. Mm-hmm.
And there's really two lines here. You've got the environmental permit line and you've got the water permit line. Okay, like as far as process that you have to go through. So on the permitting, we've had the federal inspector come to site in Zacatecas. He signed off on his report. We have signed that report back. What will happen is, at some point they will issue a permit to us, and we will have to pay that land transfer tax. And if we
Mhm.
do that within the 30 days after they give us the permit, we will have our environmental permit. Okay, so and again, that's what we've talked about Q3, late Q3, early Q4, or whatever at Q3. So we're in that process. The inspector's come, he's done his work, he's signed his report, we've signed it back. Okay, so at some point, and there's been a lot of, for the guys listening, there's in fact, our website, the Semmernet website was updated for a few permits on things that are not the full environmental permit, which got people excited. That's obviously things are trending in the right spot, but until you see it on the website, it's not real, right? But we're in the process. That process is occurring. We're not like just thumb sucking it. We're in their 60-day process
Yeah.
from the time the inspector's report was done and signed off, and so we will get that permit before the end of the year. The second part is the water permit, and that is under a group called Conagua. And if you needed water, which is where Tech is, where AXO is, they don't have their water yet. Conagua's website has finally gone back up as of late July, early August. We immediately filed our water well right permit to kind of get the water we need for Cerro de Oro. And we need that as well.
Mm.
So we can't build a mine without water, obviously. So when these guys all announce that they've got their environmental permit, the question is, do they have their water permit? Because you need industrial use water permitted for any mine. So the good news for us is there is potential permitted industrial water in the area that's very close to the mine, but I'd rather not pay a huge sum of money for it. I'd rather just get it permitted, right? But
Sure.
if the fallback is we get the environmental permit and we haven't got the Conagua permit, we can always move forward with buying some of that industrial water, right? It's just
Mm.
a cost.
Right.
So we feel pretty good about it. And it's hard, like when gold prices up and down and seesawing. At $5,000 gold, you want to build everything. At $4,000 gold, you want to take it slower, right? So that's why I said we're in the middle of, a lot of things changing. The next study to come out, as we've talked about, is the Gold Rock
Mhm.
MRE and report on going forward with Gold Rock. So that's what everybody's working on right now, because we want to get going on Gold Rock, and we could potentially have a permit around the same time from the Mexicans on the environmental. But I like people call them in air quotes, I'm saying administrative permits. Industrial water is not a administrative permit, right?
Right.
That's a real permit. And what we're applying for is our wells that we have applied for to be able to use for water. If we can't, if Canagua is going to wait 2 years to do that or a year to do that, we can go buy industrial water. It's just expensive, right? Because
Right.
somebody knows you need water. So
Yeah.
it's all, higher the gold price is, the less likelihood you want to build it faster and to care. If the lower the gold price is, the more you're going to hope that you can get Canagua in the next few months to give you the water permit. So it's just, they're binary decisions. The good news is we have options, right?
Yeah. Oh, absolutely.
And and
It's fun.
and the
It's
reason
fun.
that the government's doing all this permitting is because they're making these land use change permits, right? And they're not cheap payments. They used to be $1 million, and now they're $4 or $5 million. You know what I mean? Because
Right.
that they're broke. They're broke, and and they want money. So
Funny how that works.
realistically, this is the world we live in every environment you'd need. So again, we're confident about the permits. We're confident in our ability to build Cerro de Oro next year. And I think what I've told you and what we've seen with what's changed on the website is we're getting close to that timing, right?
Yeah. All right. Very good. It's I just kept on thinking about, when gold was moving up towards $4,000 for the first time, everybody was going, go fast, go fast. When gold came 5,000 back down to 4,000, everybody was kind of like, maybe we should hit the brakes a little bit.
Yeah. Well,
It's funny
we
how the
just
sentiment changes.
well, Trevor, it's interesting because we're building we're building two. We're going to hopefully
Yeah,
in the next quarter talk about how we're building two projects at the same time.
that's right.
We're just talking about whether we're going to build three at you know what I mean? Like, so for us as a small company, bandwidth, how much cash we have, all that stuff matters. But listen, if, as I said, I think We're very focused on doing what we said we were going to do. We've tried to, as you know, from our timelines and our milestones that we put out on the website, we're trying to manage every one of those and do what the market's told us, because it's only through that credibility can we, can we get appropriate value for our assets as we continue to build through this build cycle, right? So,
do you think? And sorry, I didn't plan on asking this question, but it kind of popped up. Obviously, Pan is just continues to deliver, and there's ways you're going to optimize that and over the next few quarters, and you mentioned about that. But the market will always provide a premium for for development and execution of that development. Do you feel that the market is giving you any sort of reward for executing on the development of Copperstone and maybe even Cerro de Oro in the background, or are we yet to get real recognition there?
We've gotten zero recognition, and I will say that is to be expected. We're announced it on May 27th, and because of the nature of it, we're not 20% through construction 2 months later, because we don't have to spend $190 million on a mine. We're building it for 58. So I think the answer is the Copperstone Gold Rock process of building, as we start to get 50, 60, 70, 80% through, then we'll get value for Cerro de Oro if we have a permit before we get there. Right now, we bought a mine. We're optimizing that mine, but we haven't built it, and we're building a new mine. We haven't, the progress there isn't what you'd normally have. The good news is we're not spending, $20 million a quarter. We probably, like in June, we spent 800,000. This quarter, we're going to spend 4 or 5 million, but it's just going to get considerably faster. So again, even though it's a full year to build it, most of the capital comes in the last 4 or 5 months, right, of that mine because of the underground development. So it's going to be a slow kind of growth. Again, I think that, we still are a prove it story. Everybody recognizes that we've got, 5x growth. And as we deliver the first stage of that growth, then you get value for the rest of it. Right.
All right. Yep.
And again, we have permits. We have all these things that other people don't have. We have, the cash to build it. As you've said, it looks pretty tight. So there's people thinking, are we going to raise equity? There's all these things that people will continue to do until you deliver. And 9 months away is not a long period of time. 10 months away, right?
No.
So again, we just kind of put our heads down, knowing that we have an asset, knowing that we're funded on the next couple of assets, and again, go through the process. We do a lot of work on what happens if CapEx 10% higher, what if gold price is 20% lower. We're always looking at those benchmarks on a cash basis to make sure we're okay. And I think we continue to do that. As I said, we're also excited to get a permit Cerro de Oro. It's our best asset. When we get that study out, it'll be the highest NPV asset in the company for the lowest capital, right? So it's exciting to get, kind of move these things forward. But right now, the good news is we've got our heads down and we're focused on blocking and tackling, right? And getting the stuff needed. Because again, the whole point of Q2 and getting there from October, when, Dave Stewart and I started, was to get that corporate side fixed up, right? That's done. Now we can solely focus on the execution of the operations and that construction.
Okay. Darren, long, thorough update, but much needed. The company and I will be touching base here this fall as conference season really starts. I don't know if we get another one in before the Beaver Creek Precious Metals Summit, but if we do, be sure we'll be reporting the news in the morning briefing. Congratulations again on a successful Q2, onwards and upwards for Q3 into Q4. Appreciate your time, and thank you so much.
Thanks a lot, Tar. Appreciate it.
Yeah. Mining Americas Inc., everybody. Trading on the TSX with MAI and on the OTCQX with MAIFF. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.